How's it going, everybody? Thank you for watching another episode of the CEO Barbecue. This time, it's not so much about grilling a CEO, although John-Mark Staude is overdue a grill, and hopefully, I'll have one some early time next year or something like that. For the ones wondering, this is John-Mark Staude, CEO of Riverside Resources. It's a prospect generator company listed under RRI on the TSX Ventures Exchange in Canada. And again, I've done a couple of interviews with John-Mark. So there's even going to be a playlist on the YouTube channel that you can go and have a look at those interviews to learn more about the company. But today, we're talking about the good, the bad, and the ugly when it comes down to jurisdictions, as well as what makes a good, a bad, and an ugly jurisdiction, and probably a bunch of other stuff relating to picking the right spot on the globe where the chances of losing your money are ever so slightly lower. But not before I've warned you that this company has paid me to conduct this interview. And you should understand that this channel is a business that makes money by producing and publishing content in various forms. This means that you cannot rely on this video for research, and you should treat it as entertainment instead. You should also be aware of the fact that the mineral exploration, development, and mining industry is one of the toughest businesses out there. It's a very tough business to deploy capital in. Losing money is the norm and should be the expectation in this sector. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including geopolitics, macroeconomics, commodity prices, and more. And it should not be participated in by non-experts. Moreover, these companies are typically in the pre-revenue stage. They don't have sales, they don't have money coming in other ways besides financing, typically on the public markets. As a general rule of thumb, you're better off understanding that all company communications, albeit this interview, their website, their presentation, their social media accounts, and everything that these companies do is intended as marketing. And although I do not make buy or sell recommendations because I obviously have no idea what I'm doing, but also because there is a clear conflict of interest given the nature of my business, many out there will do exactly that. And you should be aware of that inherent bias, and you should be aware of that happening. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're consuming any type of company specific content, albeit on social media, albeit on YouTube, albeit on a company's website, or even mainstream media. It is safer for you to approach it with a dose of skepticism and assume that the party telling you about it is biased, is either getting compensated or owns exposure to the company, because there will always be a bias in a certain way, again, albeit disclosed or not. The fact that I have no idea what I'm doing should already be clear to you at this point. I don't have a long enough track record of consistent investment profits, so I should, under no circumstances, be considered an authority on any of these things. I am not saying this to try and be funny. Although this may sound amusing to you, it is not intended as a joke. I'm not pretending to be humble. I'm simply pointing out a fact and warning you not to rely on anything I say or do. Unfortunately, at least to my understanding, nobody out there has special abilities. The guest who is here likely as part of their marketing campaign does not have any superior knowledge, and they cannot know what's going to happen in the future. They don't know what will go up, what will go down, or what's going to go in circles. And none of us know whether any of the company's activities will result in a success. Again, given that we're talking about high risk, typically very early stage activities. Also, unfortunately, try as I may, I am not always going to catch all red flag or challenges with the company. So even if I end up asking a few tough questions, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I cannot guarantee the quality of anything presented in this video. This is all to say that you should not blindly trust me or anybody on the internet, and you should do your own research. Charlie Munger actually has a great quote about speculating in junior mining startups. And although his quote was not specifically about speculating in junior mining startups, it is very fitting. And he says, quote, "If you don't understand it, don't do it," unquote. I understand this is a long warning, a long disclaimer, but it is actually important for you to understand what's being said and written in here, because no guarantees can be made about future events. And past performance is, of course, not a guarantee of future results. What you will find a lot of in here, though, are forward-looking statements. Pause the screen and read the warning that you see in order to better understand what those are, because this is a conversation that is general and impersonal in nature, containing hopes for future events that may or may not take place, again, depending on many different factors. Before continuing on, please talk to a professional, licensed investment advisor with a good long-term track record, as well as do more research before taking any decisions by visiting setterplus.ca. That is where you do research. It is not on social media. You cannot do research on YouTube or social media or investment blogs or chat boards. You go to setterplus.ca, and that is where you'll find the company's official filings. If you don't do that, you're not doing research and you're highly likely to lose your money. If you didn't have enough time to read the disclaimers shown on the screen as I was talking, or if you didn't understand them, you should not be consuming this content because you might be putting your capital at risk. With all that said, I can actually kick off this interview with John-Mark Staude, CEO of Riverside Resources. And John-Mark, you and I spoke a few months ago about your background. There's an episode on that in the Riverside playlist on the channel. People should definitely watch that. But essentially, you've worked all over the world. What's been a good place to work in? What's your favorite place to operate in, and why?
Well, I think as we'll get into this, there's different aspects of favorite. It's like, what's your favorite thing to eat? Depends what time of the day. It tells you, are you looking to be totally full? But let's talk about discovery. I had the chance to work in Mongolia and was really great, the Ivanhoe mine that's there now. And there was a moment in time that it was great to work there. And then there was other challenges along the way. And so things actually go up and down. Right now, today, I'm in Mexico at this moment. I'm down here, and I've been coming down here since 1987. So a long, long time. And so there have been different periods of time. So when you ask, what's your favorite? It's not just a location, but also a time frame. And if you look at the history of the United States or South America or South Africa or different things, there are moments in time that are great for exploration, for discovery, and for mine development. And then that jurisdiction evolves politically, environmentally, culturally, and of course, the mining laws all impact it. So today, we see a lot of excitement around Finland today. People are getting things going, and that jurisdiction is really moving. And right now, ongoingly, the state of Nevada in the United States, I was just there last week. We have a company from Riverside. We have a subsidiary in Nevada in the United States where we have royalties, and it's ongoingly good. So you asked a very simple question, and it actually fits with time and what are you trying to do, and then how quickly and cost-wise. It's not necessarily cheap to operate in Nevada. The costs are in US dollars, which is a fairly strong currency, and on top of that, the work there, the employees and staff and things tend to be expensive in the way the work is done. And also the requirements of completing things and permitting all make things fairly expensive on a dollar per meter drill basis. Or if you look at how much money, say $1 million, how far the project will go. So you asked a simple question, and I love getting barbecued.
That's and thank you so much for doing this today. That is kind of my whole strategy. Ask simple questions, have the guests do the talking, and I don't really have to do any work. Many of the good jurisdictions, though, John-Mark, are highly competitive. I mean, everyone knows Nevada, Quebec, Saskatchewan, for example, they're good jurisdictions, right? But that's also why they're stuffed with exploricos, arguably too many exploricos, all of which compete for drillers, helicopters, camp providers, assay labs, and so on and so forth. And on top of that, a lot of the land packages within those jurisdictions have already been looked at extensively and have lived in public companies over the last 80 years, some of them multiple times, right? Which makes the good or most famous, I should say, jurisdictions more challenging to pick the right companies in, I suppose, at least in a sense. So how do you deal with that when it comes down to jurisdictions?
So I think there are two questions there. One is, how is an explorer? And the second question embedded there, I heard, is how do you pick one as an
Yeah.
investor?
Yeah.
So let's look first as an explorer. So as an explorer, trying to look for good targets that could be not too expensive to try to explore and find. And it's hard in these advanced, high quality jurisdictions. People are usually drilling deep, and that's expensive. People are having to go to do targets that otherwise people haven't done. I remember when Argentina opened up, and there were great discoveries happening there. There was a lot of things going, and it really went well. So when jurisdictions open up and they become good rapidly, there's a good push, and it's a really good opportunity, kind of at that initial push for an investor. Looking at first mover companies can be good. Looking at companies that have management teams that have been successful in the past. Often for an investor, it's more difficult in the stable, good jurisdictions as opposed to the risky, difficult jurisdictions. Because as an investor, the money that'll go to only the best companies and the best people can go to those risky jurisdictions. And I think of Lundin, I think of what happens with the Robert Friedland. He goes to jurisdictions that other people don't go to and comes up with really great results because the quality of targets is much better and they're able to bring that. Whereas in the good jurisdictions, it's, as you say, it's mature, more difficult, and there's this competition. And so for the investor, it's hard because there's so many different companies to look for. So again, management, maybe looking at what coverage is being done, what analyst coverage, and also potentially for more advanced projects, because those advanced projects could definitely, as they get permitted, can be unlocked in value. So maybe not at the early stage exploration. So the early stage exploration in advanced, well-known jurisdictions can actually be high risk in that it's a very low probability of doing it. Whereas in the high risk jurisdictions, you could have a higher probability, so a lower risk for discovery and finding something.
Hmm. And I understand actually to that point of going to different jurisdictions, I understand, or to difficult jurisdictions, I understand it's a combination. Would you say geological potential matters more than a country's political situation?
The political situation can change. The rocks won't. So I started off doing, went to college doing international relations, studying Latin American studies, and I realized, I'm going to switch because the politics kept changing, and I realized the rocks didn't. So I made a career of learning the rocks of the world. I've had a chance to work in over 35 countries. I've had a chance to travel and spend time on the rocks, and I'm on the road most of the time. And I'm out there looking at the rocks because, yeah, I think the jurisdiction, the rocks are good. So if you can find good locations and wait for the politics to change. Right now, Mexico, perhaps the politics are going to get a lot better. There's been a change in the mining law, changes in the government, and now maybe those changes will be repealed or done differently, more favorable for investment, and it could take off again, and there'd be a great change. But the rocks are the same. Mexico has been the leading silver producer for 500 years. So the rocks are good. And so if you go to places the rocks are good, you'll make discoveries and wait for the time when the politics and when the permits are right, you can really do well. We see that in Alaska. There's really great rocks, good discoveries, and it's a matter of perhaps when the Republicans are now with Trump, maybe that'll be a time when things could really move ahead. And when the Democrats have come in and different things, it was more difficult and it was negative. And although Alaska tries to do things at the state level, the federal level was difficult. I think, some places the politics can change and it's good. Other places, the politics are just going to be what they are. And in the time frame, although the rocks are important, overall, in the short term, the politics are going to dominate whether you can do something. Russia, for example, very difficult for us to work in Russia, difficult in other parts, difficult in Europe. It's difficult to get permits and progress things in Europe, although people are trying, and we do see going in Portugal and in Spain, we see things progressing, and definitely in Scandinavia, a lot of good mining, a lot of good things happening there,
Mm-hmm.
and in Ireland as well.
Yeah, it's actually interesting that you brought up Ireland. That's something I didn't know before I interviewed a company that's got a project there, and it kind of became known to me. Maybe we'll touch upon Europe if we have the minute toward the second part of the conversation. But John-Mark, I want to go in depth on both of those, rocks and politics, and pick them apart to see what makes a good jurisdiction from a geological perspective and also what makes a good jurisdiction from a political perspective. So let's maybe start with the politics. What matters most when it comes down to that? Is it the permitting regime, tax code, royalties? It's a lot of moving particles. So what matters most?
First is title. If you don't have ownership and title, you don't have a lot. So having security of title and security that if you find something, you'll be able to progress it and mine it. Not that you find something and then you have to do something else that you could lose it. Because if everything is for naught, then it's very difficult. So title. I think secondly, speed of permitting and ability to get permits that allow you to build a mine. Not just permits to do exploration, but I see a lot of countries where you're allowed to kind of go and do some early stage exploration, but they don't want to really have true disturbance and things like that. So I think permitting is a second really important, and acceptance of environment. Community is vital. And with community, ownership and acceptance, and is the community going to block or allow once you find something to move it ahead? If you have a structure of laws of government and that allows a process, or is it just going to be bogged down forever, or perhaps even run off by an unstable community and things like that? So those would be the three things that I think definitely on the political side are very important from a social, environmental, economic aspect.
I want to talk about all of them, and I have them on my list here. Permitting delays are, of course, the main reason why that matters to me. And they're, by the way, one of the biggest risks, in my opinion, too, because the longer it takes to create price moving news, which you typically create with the drill bit. But if you're not allowed to put the drill bit into the ground, it's going to take longer. The longer it takes, the higher the chances of outsized dilution, which I think is one of the biggest risks for companies. But how can I know as a retail investor beyond what the company tells me? Are there any obvious tells or tips and tricks, red flags that you can give me that I can use to recognize a jurisdiction with a good permitting process versus one with a bad permitting process?
Yeah, I have one right here in front of me, by chance, just on my desk here. So you're asking, this is the survey of mining companies by the Fraser Institute. So it's a popularity contest. It's not something I'm selling. I just pulled it off the desk here at the office right now. But just, kind of type of thing that I'm using, and that type of thing. But I think looking at what other companies, looking at what major companies, looking at what examples are happening in the last 12 months really gives a glimpse of reality. Looking at press releases, not listening to what the company says, but asking for examples and checking those examples and saying, okay, who is getting permits? How many permits? Are those happening? Are the small companies getting the permits, or just the large companies? But if you're getting permits and you can see small companies are getting permits, then okay, that's really good. If only the large companies are getting permits, then you have to be a little concerned. Is it something that really goes because there's enough money behind them and enough political strength that they can get permits, but almost no one else can? It was very impressive how in Ecuador, Lundin Gold was able to go in Lundin Gold and build a mine and take over a project that had been in Kinross, and Kinross wasn't able to. And it's really interesting to see how other people could do it with focus, but can junior companies? So examples are really helpful, not necessarily what the company is saying, but really, are there examples that are happening currently where people are doing drilling and work's going on?
Are there any red flags, though, that you can kind of spot in advance? Maybe a company says, oh, we're first mover in this jurisdiction. Nothing has been permitted yet, or nothing has been permitted so far for a long time, but we are going to be that change. Is there something are there any tells, if you will, that you can notice earlier on?
Well, yeah, so I'd be careful in not saying red flag. If someone's avant-garde, someone's actually going and trying to break in, that's not necessarily a negative, it's actually good. If it's on the other hand, if the government is rescinding and taking back, canceling permits, if a government is canceling projects or taking away titles, And if the companies are unable to recover them or work out what the issue is, then that's a red flag and difficult. And you have to figure out why is it that that's happening and what's happening in that case if the government is taking over and rescinding permits. But it takes a long time to be the first. Sometimes they say leading edge instead of leading edge, and your tried process, then it can be more favorable and easy. So those junior companies that are going to be the first usually could take a lot longer because there isn't necessarily a process of how to do it, and it could be more expensive in the sense that they have to figure out how to do it. And so maybe it'll take more time and money to get there, but maybe they can get the very better projects or some really good opportunities, known places that have historic work that could be built upon and progressed if they're going into those districts. But I've sure seen these districts that have a known location go for years or decades and not made progress. And there are lots of those around. And so it's difficult. So I personally ask the question, do you have the permits? Do you have a signed agreement with the community? Do you own the title, or is it an option that someone else owns the title? If I can check those three boxes, then I start to write a check. If I can't check those three boxes, then it goes on my watch list. I'm interested, but I do think there'll be dilution and there'll be another chance for me to participate as an investor once they've gotten to that point. And I'm sad to see how much dilution happens in these projects. And in the end, I realized that once it gets to such high dilution, and particularly how they've had to finance, it's no longer really that interesting as an upside for discovery. And I don't think risk and reward are parallel or crossing, or they can be fairly independent. You can have very low reward with lots of risk. So it doesn't mean just because it has high risk, it has high reward. It could have a very low reward and still have high risk.
Welcome to junior mining, right?
Yeah.
And it almost sounds to me like you've done this before. Last
Well, I've
time we
been doing
spoke,
it for a long time, and really glad I used to have hair.
last time, would you trade all the experience though for some hair? I wouldn't.
No,
All
that's
the
okay.
experience that you have.
I'll just put on my hat.
There you go.
There we go.
Uh,
That's cheaper. There you go.
it's not a Riverside hat. Like you have a Riverside. You have good hats actually. You gave me
Yeah,
one
it's
when
good.
I
We got
met
some
you in
Riverside hats
Florida.
here.
Yeah, you should wear that all the time. I actually wear it like in daily life
Yeah,
as
I
a
wear it a
fashion
lot.
accessory. So
Yeah.
it's a good hat.
I was gonna wear it for the interview, but it's okay. I'm wearing a Riverside shirt here.
Oh, there you go. I don't have one of those yet.
There you
Although I
go.
am in Belgium, so we don't really get shirt weather all that often. So a hat is more handy. Last time you and I spoke, John-Mark, you told me that one of the main challenges for exploration companies in North America specifically were community expectations and permitting requirements, specifically relating to the communities. And you even called them unrealistic expectations. So that's part of your process when looking at a jurisdiction, is what you just told me. Talk to me more about that. How should I look at it? Because on one side, I don't want these communities to be exploited and I want them to get their fair share, but I don't want them to be slowing down progress either, right? So it has to be some sort of a balance, but how can I recognize that balance as a retail investor?
Yeah, I would really question about exploited, honestly. Exploration companies, and there are very few companies and projects that get built as mines.
Mm.
So investment, no one's making money. People are investing and trying to spend money to make a discovery and forward things. So it's all a loss other than selling the project. But no one's really, so it's exploration. If you're not able to drill, if you're not ahead of time, then there's really no upside for the investor and the people can't do it. On the other hand, if the communities say, look, okay, come work here, clean up what you've done, that's great, do environmentally sensitive, but hire us, bring money to our community, help with infrastructure, maybe help build the school, maybe help fix fencing, those things are great. Whereas people say, look, just pay us cash. We want to take a fee. We live here. We want to be paid for the inconvenience. And I question, is there really inconvenience? The footprint of exploration is tiny. You're using existing infrastructure and working off it a little bit, and you're reclaiming any disturbance that you do. In many places, the growth and land rejuvenates and grows as well. And we're not digging big holes. We're not mining. We're simply doing exploration. So I think that many cases, the governments have said, okay, go and negotiate with the community, and the communities change, have lots of different people, lots of different things, and there's a lack of consistency. It's very difficult for the companies, and it's killing the exploration. So it's killing the ability to develop projects. And so if the world needs resources and wants to see resources in your country or in your state and jobs, there definitely needs to be this investment, and it's locking and blocking the investment, lacking the chance to deploy capital. And I myself, we have lost tens of millions of allocated capital in dollars, American or whatever, that we're not able to spend because the permits or the titles are not coming through. And so all those jobs, all that money, all that potential went other places, maybe even left the whole industry, and we don't have critical metals. That's why we call them critical, because we don't have them, and we don't have a knowledge where they are and haven't made a lot of progress. So I think there's a great opportunity right now in 2025 to say, okay, we do want to have within our countries these resources, and we want to allow exploration.
Do you think that's really gonna change, though? Is there hope for North America specifically that we're talking about here, and Europe, for nimbyism essentially to start disappearing? Do you think it's realistic to expect that?
So if it doesn't, then it's not realistic to expect that we have the resources. That's all. So we won't have the resources. So it's expected, okay? It's expected we're going to be, trying to be beholden to China and to other jurisdictions that allow it. So that's okay. It's a benefit. I mean, look, if I go drink a lot, I get drunk. The next morning I wake up with a headache. It's called a hangover. It's okay. I had fun, but I have a hangover, and nothing wrong with it. And so we're going to have a hangover on resources. We're not going to have the resources, so we're going to need to pay up. And maybe we can't have computers. Maybe we can't have the electronics, or maybe we can't do it, and we'll just have to pay. And what are we going to do to generate the wealth that's going to pay those other countries that produce that product? And they can charge a lot, and we have no ability to produce the resources. We have no ability to get the resources to then put into our own production plants. People aren't going to export the raw materials to us. So the raw materials, they'll export the finished products to us, and we'll buy their finished products. But it'll be difficult in Germany to get the right key things. German technology engineering is fabulous. But if in our production plants we can't get the inputs, because they say, no, we're not going to give it to any country that does business with someone that's doing a tariff or something like that, well, we're kind of stuck. And that's going to be really happening here. And it's beginning to happen, and it's quite significant. And so I've tried to create a company that's looking in North America for resources, for these critical metals, so we will at least have them. But as you say, if we don't permit it, then nothing's going to happen. And those projects that we have are the good projects, good potential. But it takes, hopefully people will turn around and go, look, this is critical. We want to do it. The governments will say, no, we're going to push forward, and we don't have to wait till a wartime crisis. That's when a lot of the resources get progressed and developed, is during wartime. It's like, okay, now it's an emergency, and then they can all of a sudden get everything pushed through. And we don't, it's nice to work without emergency.
Hello, uranium mining in Canada. That's kind of how that came to be, right? As far as I understand it. Whose responsibility do you think it is to fix or streamline the community relations process? Is it the government's responsibility to put better rules in place? Is it the community's own responsibility? And again, it's kind of a global thing, so putting everything under one umbrella might be challenging, but whose responsibility is it ultimately?
So when the governments support it and push things through, it happens. And when they don't, it doesn't. We could talk about all the other aspects, but fundamentally, if the governments are pushing and supporting and doing it, then it happens. If the governments aren't, and it puts it to the communities are quite heterogeneous, and they themselves simply are not necessarily that understanding of the global context, and are looking and have a lot of changes. changes of leadership, voting, and a lot of issues. And so it's not them. So the government's saying it should be the companies. So the companies are trying to do it, but without the government really providing the umbrella, providing the protection and interest of this is what we're doing and setting the laws that say, look, we're going to push this through. This is going to happen. We'll adjust and fit with the community, but to let it go. But if the government pushes it down on the industry is trying, but fundamentally is just flailing because now they're trying to have separate agreements with the communities. It becomes very confusing. The communities feel that their expectations aren't being fulfilled. The corporations have a short-term view. They're not a government. A government has a long-term view. A corporation goes quarter by quarter, year by year. The CEOs change, the management changes, their shareholders change. Their job is to, on a short-term basis, end up with positive results. So they comply with whatever the laws are. So I think that if the government make laws that says we want to have this happen, we have critical metals now. We didn't have them critical before. Now they're becoming critical. And there aren't the production centers. So it's not going to be community. The companies aren't able to do it unless they're the permits, unless there's the title, unless there's the law that allows it to happen. And in the absence of that, if it's said the companies are supposed to go and work on it, it's just taking too much time, too much money, and the investors are losing because the investors are therefore funding something that doesn't have a real upside of a win in the short enough time for their investment.
Do you have an example for me of where that is happening now? Like, is there a government that you essentially like, where you're like, oh, this government is doing their best. They're actually bringing a change into the entire process?
So I'm impressed in Ontario for the government is trying to help with flow-through funding. Ontario Junior Exploration Fund, they're trying to help with funding, but they're failing at making rules that allow things to go ahead and instead pushing it to negotiate with the community. I like in Scandinavia, we have governments that are saying, trying to help where people can move projects ahead and forward things. And I think that that's good. And people are doing it. Now it's expensive and you need to pay, but there's a process. It's clear. And companies like B2 Gold, other companies that are operating are able to move ahead on projects and progress. And that is good. I think Australia has been through different periods of time and there are different jurisdictions, but I'm impressed in Australia, particularly in West Australia, Southern Australia, and projects are able to move ahead. There are not too many people. It's fairly open and general, and people are able to develop projects and progress them. And I think the government understands and supports. So those would be a number of places I see the government is actually being supportive and things are moving ahead.
So there is light at the end of the tunnel, if you will. It's been a long tunnel, to be fair, too. To go back to the politics of it all, why I understand that the tax regime and the government royalty structure matter for mining companies, so for actually producing companies, is that also something that matters to you as an exploration company? Does it matter all that much for exploricos in general?
It does for the access to capital, because if you look at it, to get the access to capital, if people feel they can find something and then mine it quickly, then the capital can come. But if they feel that, okay, even if you find something, then the taxation and all the complexity and maybe all the negotiation, then even the value of the prize, it changes the type of target, the size of target, and if you really can work there or not. So as it becomes a more expensive regime with more royalties, it's harder to get money to come and take that risk because you know that you're going to have to carry that royalty on the project. So it makes that jurisdiction less competitive or uncompetitive. So I think that definitely affects it. We saw it interestingly in West Africa that the governments would take a 10% profits interest in projects and they could move ahead. But then countries started to ask for 20 or more, and it killed different things, and it really hurt. We saw a lot of development in West Africa of mines. Then things being seized, change of politics, and all of a sudden it's a terrible jurisdiction, and they're taken away. But all those mines that were developed that now the different groups that can come in were built was under a fairly stable tax regime that had a 10% interest going to the government. So that was good. So you could still make it work as long as you had stability. But if it gets to be too greedy or unstable and changing, then it's hard for investment, I think.
What is a good royalty structure? What does that look like on a government level? What's inviting, if you will, to investment?
So net smelter royalties are much better than gross royalties. Carried interests are okay, but the problem is they don't actually put up any capital, whereas a net smelter interest is better than a carried interest because once you net out all the costs, and ideally would be a net profits interest. So once something is profitable, then you can pay a percentage of the profit, but you can cover all your costs. That would be the ideal type of relationship. And that really allows for the projects to go. And then as the projects become highly profitable, you share in the profit, but you don't hinder the development or the creation of jobs. I think people don't realize that so much of the mining project is the infrastructure, all the added benefits, the business, all the tax that relates with every transaction you're doing. That's really what it is. It's not really the royalty on the mine. It's all the business you're doing. Give up the royalty and get much more money from all the businesses, the government you're getting from the development and capital that flows in. Raise that royalty and you shrink the whole pie. You shrink all the investment and it really hinders and nothing gets done. So I'm really sad to see how governments raise the royalty thinking they're going to get more money, and instead they kill the business and it doesn't happen. Those that cut the royalty make a lot more money because you get all the money from all the tax. You also have all your employees, your staff, everyone working. They're all paying tax. That's where you make the money, is from income tax, from all the business tax, not from the small percent of a royalty. It's really small thinking and a lack of understanding of how business works and all the cash flow and everything that goes on, which is in the billions and trillions of dollars, and the royalty only pays out in millions.
Do you think we'll see more of that, where governments try to take a bigger chunk of the pie as we see higher commodity prices, and eventually in some spots it might turn out to be resource nationalism, dare I say? So do you think we're going to see more of that, and is resource nationalism going to become a bigger risk?
Yeah, I think one of the things is commodity prices aren't higher. Inflation is happening to everything. So the margins are not expanding. They continue to be squeezed or about the same. So people see that, and governments think that, okay, prices are higher. But I know everything that I'm going. When I go buy my McDonald's burger, when I go to do anything, I go to gas, everything's more expensive. My operating costs are more expensive. My living costs are expensive. My salary costs are expensive. So the metal prices are going up more or less similar to everything else. So I think that's one thing. But yeah, governments say, okay, prices are up. Therefore, you should be making more money and we want to take it out. Look at the financials on these companies and they're not making more money. They're not paying more dividend. They're not actually accumulating more cash. And the commodity prices are quite volatile up and down. So you have to survive the low times. And so these royalties are not necessarily staged as a profits interest. If they were a profits interest, then okay. If people are making a lot of profit, then you could actually pay out and do that. So I think, yeah, that the governments and government nationalization is really bad because governments are not set up to be operating of businesses or operating things. I'd much rather see companies set up and governments that have privatized infrastructure, governments that have privatized businesses allowed them to grow, and governments continually that try to do it all themselves, they're not as efficient. It becomes more expensive, can't put it into the capital, and it's not their job. They're trying to take care of people, not to run an industry. So governments that try to take over ends up flopping. And I don't see them developing resources. I see them hindering and in the end dying and failing in those projects and missing the opportunity.
That is what I've found so far as well. And you mentioned infrastructure a couple of times. I do want to touch upon infrastructure a little bit later on. We've kind of been through about half of our time. So I also want to move toward talking about geological potential. We have a lot to go through here, John-Mark, but for example, I always hear that the best place to find a mine is in the head frame of an existing mine. But it's one of those one-liners that I've heard so many times. I've heard it way more many times than I've seen it work. Right. So a lot more companies have told me, hey, we're going to find a mine here because there's another mine close by, but really only sometimes it works. So how important is the presence or the history of major operating mines for you when judging a jurisdiction's potential? And this is particularly applying to jurisdictions that are not that are a little more obscure. So not your Nevadas or your Ontario or whatever.
So, yeah, so one thing is looking at how much money needs to be spent to find something. And so for me, looking at geological features, looking at the right age rocks, looking for the right chemistry, looking for the right types of geochemistry and geophysics is critical. Once we're in the right type of chemistry and the right type of rocks, then you could have big discoveries. And big discoveries are not necessarily right next to the head frame. I know we had the chance to make the discovery and be part of it in Oyu-Tolgoi. It was just a hill of copper. It was anomaly 62 with Magma Erdenet joint venture. It was simply a recon study in the South Gobi Desert, south of Ulaanbaatar in Mongolia. And it was capital spent by Robert Friedland and Ivanhoe, drilling, spending money that made that discovery and progressed it. What we had found with Magma Copper Company in our 19 holes, and then the additional little bit of drilling with BHP really showed that there was something there, but it was the continued exploration. So finding something new. So going to good belts is important. I know I set up the company in Turkey. I went to Turkey and did a big porphyry copper program there. It's now called EMX Royalties as a company, but we built a portfolio there and did it. And it was going on a belt that's a favorable belt, but we didn't try to go next to a mine. Instead, we said, okay, this is the right rocks, the right type of geology. And lo and behold, Peapot Maden, many different discoveries have been found now in eastern Turkey, and it was a lot of fun. And we found things and it was good. So I think that was great. On the other hand, I was involved in Resolution, and that used to be called the Magma Porphyry when we drilled and made the discovery there. And that was actually using the head frame. So we were down underground and drilling lateral to it, and we did find something. We found the source for what had actually created all the veins underneath it. So it wasn't next to head frame, it was below it. So we were right underneath it and we found the source to the deposit. And so that's an interesting approach. And I think we're spending a lot of time with models of deposits trying to explore for the sources of deposits in our deposit thinking. But it takes a lot of money to do that. So I think that exploration, access to exploration money, ability to drill holes really is what helps, and having the right type of geology, reactive host rocks, favorable age, and particularly the right type of oxidation and sulfidation. So the right type of chemistry of the minerals that becomes something that can be economically extracted and economically processed.
That's what it comes down to in the end. I mean, finding something that I call it the 3M approach. So it's MMM, margin matters most. That's what you're looking for, a deposit that can come out profitable in the other end. And the important part is something else that sometimes bogs down deposits is again kind of a combination between geology and politics, because geology doesn't care about ideology. That's also another saying that I like. The rocks don't care about us humans and our little silly little ideologies. So oftentimes good projects can, well, not oftentimes, but sometimes they can occur between two jurisdictions. You know, that half of it is in one country, the other one is another country, or between two provinces or whatnot, or between two indigenous groups that are fighting or whatever it might be. What do you think of those situations? Is that immediately something you would step away from, where you're like, okay, this is split, it's going to be too complicated? I like the rocks, but because humans have kind of ideologically maybe split it, I'm not going to touch it? Or is there still opportunities in those?
I think for the investor, you'd be unfortunately surprised how long it takes and how much money to resolve these fundamental issues. On the other hand, for the corporation, if they can get through it, then they can consolidate, then it can be very interesting. Country boundaries aren't going to change as easily as maybe community making things work. And so when you're going across the Argentina-Chile boundary or other country boundaries, those are fundamentally pretty difficult usually. On the other hand, in Peru, you can have different communities, at Las Bambas, for example, and then maybe they can work together and work things out and you can get through it. So communities more easily than governmental boundaries. And I think, yeah, that it can take more time, but it can be quite profitable to do. I have found that the investors aren't that patient. So am I personally going to be able to backstop and bring in the money needed to get through this difficult stage? It takes a lot of capital. And if the investors aren't there, then I myself have to do it as one of the lead investors. And I've never sold a share in the companies I work in, and we continue to invest in every financing round. So I'm more and more, and I always keep my position and keep investing into the companies and trying to get an exit with all the other shareholders. So if you're going to do that, and it's going to take a long time, it can be very dilutive. So I think as an investor, if you can go into companies that have the permits and have the ability is good. If you're going into, as an investor, into places that they have to resolve those things, expect it could take a lot longer. It may not come your time of holding the stock or holding the investment and ability to continue to finance as the price goes down and they do additional financings, and you don't want to get diluted, that you keep participating or buying in the market to keep your position in is important. The value of the prize is there and it's good, but it's not going to go up necessarily until you can make that discovery. And until you can make discovery, you need to consolidate the land.
Well, talking about some of the deposits that occur between Chile and Argentina, that's reminding me of some of them are very high up in the Andes too. So it's reminding me of infrastructure, another very important piece of the jurisdictional puzzle. But when and how much does the availability of infrastructure matter? I mean, for me, when a company mentions excellent infrastructure in their presentation, again, it happens more often than there are excellent infrastructures. But first of all, what I'm thinking is, how do I know it's really excellent the way they say it? Are there any tips and tricks again? But also, why should I care about infrastructure in the first place when I'm going into an Explore Co?
Oh, definitely important. And I think when I look at a deck or a presentation, do I see a pickup truck? Do I see something that actually drove there? If someone got a pickup truck to site, then I'm like, okay, that's pretty cool. If you can drive your truck there, that's a good sign. Better yet, have you driven a car there? If you've driven a car there, not even a pickup truck, is like, heck, okay, that's really good. I mean, that's crazy good. That's too good. If it's only helicopter or a remote, and you have to fly and land on ice, seasonality. Do I see that they're only able to work a certain part of the year, a certain season? Can you work all year round? So infrastructure is really important. If you look at a company, you can get about $1 million in a financing, or maybe even $2 million in a financing. And if you do that, you could have $1 million of that to go in the ground and $1 million to operate. So if you're going to do that and you have bad infrastructure, it's going to be much more expensive to do the work. You're going to get a lot fewer chances for discovery, and it's going to be much more dilutive for that company, and they're going to come back for financing more and more. I operate a company called Riverside. We only have 75 million shares out after 17 years. That's almost unheard of, and that's because I choose infrastructure. Here I am in Hermosillo. I came on a standard airplane. I came on a coach class seat in a plane where I had to stand in line an hour to get there early to get a seat. And that was great. And you have to, everyone carries on their own bags because you get charged more for luggage. You didn't even get a water or juice on the plane. You had to pay extra for that. So you bring your own water on the plane, but you save money and use infrastructure. And that's the type of thing we've done. So we've been able to stretch the money, no business class, not having to charter anything, and we can travel and do our work. And so if you can do that with your staff and work and use the infrastructure, then it's much cheaper, and each dollar you spend can go on the ground and it doesn't take as many dollars. So I find it's vital. And I think that there's great geologic potential to find and do work in exciting remote locations, but I've not seen those get developed very quickly. On the other hand, the places that have good infrastructure, it's easy to get a partner to come. It's easy to have the major come and visit. It's easy to get the permitting. It's easy to get them developed. And I've seen those built mines. Here in Mexico, I've seen over 10 mines built in the last 25 years. Other places, you don't see that happening. And I see in British Columbia, northern British Columbia, the Yukon, yeah, we've built some mines. Those mines that were built were ones that you could drive pretty close to. And those remote places have not been developed yet. And they're still on the wait list to get developed. So it's exciting as an explorer to go to some place, but until you have a road access, until you can get there with your pickup truck, it's going to be a long time to be able to see that project really unlocked for fundamental, really great value.
17 years running a public company, you're not flying private, John-Mark. Come on, that's the first lesson they teach you on the venture exchange, right? You take a subscription to a private jet. Jokes aside, when we talk about infrastructure, I find that oftentimes it's referring to roads in the first place, but that's not it. The infrastructure encompasses many different things. I mean, how would you maybe rank it? Might be a better question. As in, you have energy, water, roads, internet. There's a bunch of things that would fall into the bucket of infrastructure. What matters most when it comes down to the infrastructure?
So we're talking about exploration. Exploration is about making a discovery. A discovery is, at the end, is gram meters, is a value in drilling. And if we can drill cost effectively, we can make a discovery. The next stage would be to develop that discovery into a resource. The next would then be doing studies to see what would be the economics of it. Once we start doing those economic studies, the other infrastructure comes to play. But that's after, in the Lassonde curve, the discovery, or at least part of the Lassonde curve. So if you go up the Lassonde curve, that initial part, and in your video, you can cut in and show some of the Lassonde curve here for this later, and you'll show that, and you'll show how you go up. And that first part of discovery really doesn't need other infrastructure. You need water. You need water to drill. Where are you going to get water? Okay, we got to get water. Power, you're going to use diesel, you're going to use fuel, you're not necessarily going to use electricity. We talk about infrastructure of high power lines, of energy and power plants. Those are all very important for building mines, and they're all important in the capital cost to build things, but that's not in exploration. So when we get to mining, it's so important to have power. It's so important to have access to energy. So that's a big gap, especially at scale. You can do small projects using diesel or maybe using renewable energy, but to do large projects takes a lot of capital. And if you have to build the infrastructure plants, that's even more capital and more permitting that's needed. So if you go to places that have power lines nearby and you have an ability to take power off of those power lines, that would be good at the stage that you're going to build a mine. But that's going to be 20 years from the discovery as a small exploration investor, and the project will probably by that time have been accumulated into a major company that can build a mine, or maybe a mid-tier that's going to build it. So yeah, so power and infrastructure, I think people talk about those often in presentations, and they really do help, and they're important, and they do go somewhat with road access, not 100%, but definitely having power lines and things like that. But it doesn't make a difference until you need to build something. And we're not building anything until we're pretty far along the path of economic studies.
We're talking about availability of water and whatnot. The availability of skilled labor matters too, right? Again, and understandably, that matters a lot more for the producers or aspiring producers, but does it matter for explorers too?
Well, the explorers need to have skilled people. And I'm down here in Mexico today meeting with my team, preparing because we're operating an exploration company for Fortuna Mining. So we've been the operator for BHP. We've been the operator for programs with other companies like Kinross and Centerra. And we've done programs with different partners, like working with Antofagasta. So skilled labor is vital, local skilled labor. So I've tried to specialize in training and working with local skilled people. We do that in Ontario with the company Blue Jay that we have. We work with the local communities, training and doing work with them and bringing in skilled people to do that training and then training up a workforce. I had the chance to work at Alamos Gold back when it was forming with mulattoes and did the discovery, published my PhD dissertation on the discovery, and there was building skilled labor. So yeah, it's really important and taking a few people in that know how to do it and then training. That idea of you teach a person how to fish and they'll have fish for life. So train people how to do the work and then they can do it. And we've been doing that for 30 years and it's a lot of fun. So yeah, I think it's really great to work with skilled labor. One of my people has been doing an 11-day course. He's doing it today, continuing. And so we have ongoing education. And I was just talking half an hour ago before this talk with another of my staff members, how we're helping that person learn English, working on their English skills as well, so they can go internationally for work. We're always working. Knowledge is golden in all aspects. That's Riverside.
How important is language when it comes down to the jurisdiction? And I suppose it is a combination between the right team with the right language. I know you speak Spanish yourself. Um, but yeah, how important is language when it comes down to picking a jurisdiction?
Language is vital. And so we always work with local people in the local environment. It's not just the language of Spanish, but actually also the language of culture, of understanding what's going on. If you go to the United States, everyone's talking about college football. What's your college football team? You go to Canada, everyone's talking hockey, and everyone's like on what it is about hockey. You know, you go to Scandinavia, cross-country skiing is big, and people are doing cross-country skiing, and people really do it. You go to Alaska, sled dogging. And so what's happening there? And so it's the language is important to be able to speak. And so we all try to work with local language and local people and then having a fluency in that and also using local people working in Peru, speaking Quechua or Amara, the different local dialect, local languages that are spoken in the mountains of Peru, for example. It's not Spanish, it's other local languages. And then, of course, with First Nations, having someone that can actually work with the First Nations and really work in their language. So if you can talk to community in the language of the community, that's a real respect. It's a real ability to communicate. So really important. And so I've always tried to work with local partners in local places. I'm the only foreigner down here right now. Everyone else is Mexican in this office. We go to Chile, it'll be all Chileans. Try to work that way and try to do it so we speak the language and work with the culture where we go.
Hmm. ¿Tú hablas español?
Por supuesto, hacemos todo en español. Muy bien.
Not me. I'm just pretending. No, I know a couple of sentences, but that's actually maybe a good point because you want management with experience in the specific task in that specific jurisdiction because you want them to speak the language, not so much that you say, a good jurisdiction is an English speaking jurisdiction and a bad jurisdiction is where they don't speak English. There's no such thing in my opinion. My opinion is more like, does your management in combination with that jurisdiction, does it work? Because if your manager speaks French, maybe you can go to France if you want to deal with that part of the permitting process. But that's kind of a point that I've also heard. So
It is true. And so, Quebec, they speak a certain type of French, and you go to West Africa, they speak a different type of French. You go to the different islands and the different places. There's lots of different Frenches that are spoken, and that's important. So working in those jurisdictions, but yeah, knowing the language is important, and having management team that can do it. And then you may have someone in between who can bring the money and work together. So it's collaborative. But I think definitely part of it is who's on the ground. How are those people committed, and do they have a good sense of ethics? And so can you have confidence in what they're doing and saying and speaking can fit? So that's really important. And if you have that good, stable law environment, it's great for doing mine development and mining.
what do you think most investors get wrong when judging the viability of a jurisdiction, though? I mean, maybe it's not language, or maybe it is language, or what else?
I think actually is hope. we hope things are going to change. And I think we get wrong is how long it takes. And I think we get wrong how things just continually can slide as investors. That's what we get wrong. What we get right is, well, they actually, they turned around and went up, and that's great. And that's really good. Or we get right that they're going to be bad and we don't invest. So what we do is we invest in the jurisdictions that are declining, and that's what we get wrong as an investor, that they just don't turn around quickly, and they can go. Rick Rule's a very good investor, and he often talks that things can go much longer than an investor can stay solvent or a corporation can stay solvent. And so I think what we get wrong is how much time and money is it going to take for our catalyst to happen. Thus, I put a lot of effort as the CEO into places that you can get the permits, into projects that have the permits, and I put a lot of effort into bringing those permits with the projects. So we're ready to drill with our company Blue Jay. We've done deals with people that have permits, and we're moving ahead in that way so that we can take the money and really do the work on the ground in places we can drive up to with our pickup trucks. So we do that a lot as our focus to really make sure that it's actionable projects in places that are stable, not trying to take money to then go and try to change the world. It's just takes too much time. It's too difficult on the shareholders.
You've got to run in 2 minutes, and I have two more questions. So 1 minute each. If you could just pick one jurisdiction to operate in today, where would it be and why?
So I'm really excited about working in Nevada right now. I think because the change in the politics, we've been through it before, and I think it's an exciting time. I was just there, and I think that the Great Basin has a good chance because of the politics to move things ahead. I'm excited by that, and if I choose one, that's one to jump into.
Last one. If you could pick one jurisdiction that you would go into last, let's not say never, because you should never say never, but what's a jurisdiction you wouldn't go into right now for sure?
So one that I'd love to go to Haiti, but I won't go in there. It's just too complicated. But I love the geology, and we talk about a boundary. The Dominican Republic and Haiti, I'm fascinated. I love the geology and the potential in Haiti. It's fabulous, and it's hate the country. It's just difficult. So that's one that I love the potential geologically, and that I find it to be very challenging. And so I just won't go there, but I'd love to be there and work there. But it's just too complicated to develop the resources there.
What do you think is going to be the next? I kind of lied because I said it's going to be the last question, but I'm thinking of another one. What do you think is going to be the next jurisdiction for Riverside that you're going to get exposure to?
Well, we're working on Nevada right now, and I was down there, and I think that's one that we're making moves into. We've been progressing on it with this election, and so I think that's one that we're moving into.
Good. And that's John-Mark Staude of Riverside Resources. Sir, thank you so much for your time today.
Thank you very much, Antonio.